Hi, I'm Kerry Grinkmeyer, retired financial advisor. I was a CFP, a CHFC, and a CLU. And what I wanted to talk about today is long-term care. It's an insurance to make sure that your expenses, if you go into a nursing home, are taken care of. And I got a letter from RiverSource. That's the provider of our long-term care insurance. We bought this, Nita and I bought this back in when we were 50 years old, so that was some 27 years ago, and we've been paying on it for the duration. And I covered it with this in a video on July the 27th, so you can go back and I go through the reasons as to why we bought it, how we made the decisions that we did. But they sent me a letter today that told me that on November 15th, 2021, your quarterly premiums will increase from $335.69 to $385.97. So rounding that off, that's about a $50 per quarter increase. And that's for my policy, and it's a similar increase for Nita's policy. So it goes into some detail on this first page that I want to share with you, because if you're going to get long-term care insurance, you're going to deal with this. As I said, we've had it for quite some time. But it goes on to say that we originally requested a 44% per premium rate increase. However, the Department of Insurance filed an increase of only 15%. So what the premium rate increases in the future is followed by the state of allowed by the state of Alabama. So what I read into this is they have to file with the state of Alabama for an increase in my premium, and they wanted a 44%, but Alabama said no, you can only increase his premium for 15%. It goes on to say, and later in here, that they will be getting back to me. They will be increasing the premiums in the future. But they give me some choices. And I want to share those choices with you so that you, if you don't have and are considering, you know what you're getting into. This is a lot like fire insurance or flood insurance. When the situation, they're getting a lot of claims, they have the right to increase their cost, much as I'm quite sure that the people who have flood insurance in Louisiana are going to see some increases in their flood insurance premiums because of all the hurricanes that are coming there and all the climate change issues that we're having, much as fire insurance in California. And now I would say that probably, as from what happened in New York City, they're going to have some flood insurance increases there. So these things change. So, okay. They then said, carefully consider your options outlined below. And I want you to see this as I go through it. I have the ability to adjust the maximum daily benefit that we will pay according to the policy. Or I have the ability to adjust the total length of time the benefit will be paid under the policy. So they're going on to say that, or I can keep the coverage, and if I keep the coverage, my quarterly premium will increase from $335 to $385, which they've already said. And my daily benefit will stay at $258.02 per day, with an unlimited period. Then we go down to this box, and I want you to see that. And because this is full disclosure, and I totally appreciate it, I can shorten, it tells me what it is if I keep it. If I shorten my benefit period to 4 years rather than unlimited, my premium, new premium, comes down to $274.68. That might be a good option. I think history says that if I go into a nursing home, I'm going to, on the average, I'm going to spend 2 years there. And as you can see, they give me a further shortened period to 3 years, and my premium drops from $385 to $267. And then they offer me a reduced daily benefit. So my current daily benefit is $258.02, and under this, with an unlimited payment, the daily benefit would drop to $225.76, and my premium would drop to $337, about what it is now. Or I can combine the two and reduce my daily benefit to $225 and my coverage period to 4 years. And then my premium drops to $240. So that gives me some idea as to what my options are. My consideration is going to be, of course, affordability and risk and reward. If I reduce my payment period, there is a risk that after 4 years or after 3 years, I got to start bellying up. And I could reduce, I could spend down my assets. So it's an insurance question, and it is an affordability question. Now, the other option I have is to convert to a paid-up policy with reduced benefits. It says you have the option to stop paying premiums within 120 days following your policy anniversary on November the 15th, 2021, and you will have a paid-up policy with a lifetime maximum benefit of approximately $18,791. This amount is equal to the sum of the premiums that you have paid thus far in your policy. That won't keep me in the nursing home for much of a long time. That, to me, is not an option. But the reality is, if you have followed my YouTube channel, you know that I have an income. I have an income from my YouTube channel. I have an income in excess of my need. So my decision will be basically to keep what I got. I've invested, 27 years into it now. If I'm correct, 18,000, multiply that probably times 2 because Nita has a policy as well. And we're getting older. Is there a probability that we will need this policy, that we will go into a nursing home? Statistics say that there's a 60% probability that that both of us will spend some time in a nursing home, and that time will be 2 years. I don't have to be in a position where I'm laying in a bed in a nursing home, or my wife is laying in a bed in a nursing home, and we're approaching the 3-year maximum or the 4-year maximum, and I've got to make a decision. I don't want to deal with that. So my commitment is, and what I will do, is keep this policy intact. Now, how you do it is totally dependent upon your situation. My emphasis is take these questions off the table. In retirement, don't just stop. Find something that you can do that is in fact enjoyable for you and that will provide you with additional income so that things like this aren't upsetting. Nita basically said to me, you look it over and you tell me what I should do and I'll sign it and we'll send it in. Well, I knew what I was going to do, but I thought, what a wonderful opportunity to share the perils of long-term care insurance, because I don't think a lot of people think of this. I think a lot of people think that long-term care insurance is a lot like life insurance, that you establish a premium and you pay that premium for either a designated period of time or forever, and you have coverage. They don't equate long-term care insurance to be similar to their homeowner's insurance. If you much as I said, if you live in Louisiana and California, where fires and flooding is a regular issue, tornadoes in Louisiana, you're going to have to face these sort of things. Do I think that most of us need long-term care insurance? Yes, I do. Yes, I do. It can devastate you. It can cause you to make some bad decisions. I have a friend who got Alzheimer's. He was actually younger than me, and his wife did not have long-term care. They explored the area of putting their house and their assets into a living trust, but then they had to deal with a 3 or 4 year clawback period where Medicare, and what they were going to try to do was qualify him for Medicaid so that he could go into the nursing home and you and I could pay. I don't personally like that. I think if I take care of my situation, you should take care of your situation. But that's more my opinion. So be aware of these things because it's important. It's a retirement decision that you need to make. You need to make early on in your planning for retirement. And then, as I said, they're going to notify, if you do make the decision I made and have it, be aware your rates are going to go up. It's the way it works. So we will sign off and tell RiverSource, go ahead and raise our premium. What is it, $50? So it'll be $50 for me, $50 for Nita. And we're just going to have to build into our budget, since it's $50 a quarter, that's $400, that additional expenditure per year that we'll have to make sure this is intact. And they have basically told me they wanted a 44% and only got a 15%, but I think that's kind of playing the game. So I expect it to go up into the future, or in the future. So that's my take. I hope that's beneficial. I hope that enlightens you some. And if this is the kind of information that you'd like, you're experiencing retirement from me as it happens. And that's what I'd like to do, be your source for good information so that you can make this part of your life, the second half of your life, the best part of your life. There's a lot of decisions that need to be made, and a lot of them are financial and emotional. This is, it will happen. So be prepared for it. Talk to you again soon.